So let's just unpick first sort of the reaction that we've had in emerging markets following this détente, the trade truce between the US and China. I mean, June was a really good month for EM equities, the best since January. On this trade truce, despite all the lingering uncertainty, do you expect that to give a further boost to emerging market equities?
We think it can help with sentiment for sure. And obviously the market this year has been trading very much on whether we'll get a resolution between the US and China. The reality for us is actually what people should be focusing on is the underlying fundamental picture. And for the most part, it's still fairly robust. We've clearly seen a little bit of a slowdown in growth momentum, in particular in places like China and Asia, but actually the underlying dynamics are still fairly solid. And even China growing at something like 6.1% this year is not the worst outcome for markets as long as it drives underlying earnings growth for some of the companies.
Yeah, and what's great is because you're a bottom-up investor, you can really talk about some of the detail below the surface, because we certainly don't want to talk about EM as one basket. So let's focus on China for just a second. In terms of policy support, and of course we were just talking about measures about opening up the economy, etc., which kinds of stocks in particular do you expect to benefit from Chinese policy support if you expect more to come?
Sure, and actually it's kind of a similar picture when we think about what suffered last year and what we thought actually could be well placed to do well this year. Very much the domestic economy in China we thought got oversold last year. And if you think about some of the underlying dynamics, the consumer really suffered as sentiment worsened. Actually, that was always in our mind not too badly positioned, especially with the stimulus you've seen pushed through into the market this year. And so I think in particular, when we look at China and we think both medium and longer term, companies exposed to this new China phenomenon, this millennial phenomenon where you've got 450 people under the age of 40 moving into peak income years, actually really well placed to deliver strong long-term earnings growth and maybe a little bit more insulated from some of the near-term trade dynamics that people are obviously focused in on.
Do you expect financials to benefit much and that sort of sector in China as well?
There's definitely some parts of the financial space that we do find interesting, especially as you think about the broader liberalization of the capital market and as you think about deleveraging and some of the SOE reform, which is quite a big burden on the balance sheet of some of the banks. Though what I would say is, from our perspective as a fundamental bottom-up investor, you have to be very cognizant of the government influence in some of that space. Right. You want to be a respected minority in some of those positions, and unfortunately what happens as you go through that deleveraging cycle in some instances is the banks are used to help manage that cycle.